Good morning. This is Rich Nelson with Allendale for the early morning comments here for Wednesday, June 15th of 2016. As far as news today here on a Wednesday, we've of course got the FOMC meeting going on. This is the two-day meeting, and they should be wrapping up here this morning, giving some announcements just after noon as far as their impending decisions on changes for interest rate policies. At this time, the trade does not see any major changes at all for interest rate policy on either the June or July updates for these for the Federal Reserve. They're expecting right now the maybe next change to be possibly on the September meeting series. As far as U.S. dollar index, last trade is currently down about 4 cents. Crude oil itself down another 67 cents here, now at 47.82. Keep in mind that peak in crude oil prices just 4 days ago was 51.67. So now we're approaching, in this case, about a $4 break off those highs for crude. And this does give us some type of influence to discuss here as far as the trade on the grain issues here. And speaking of grains, looks like early calls right now running about 2 to 4 cents higher here for the day. On a bearish note, we will point out that yesterday afternoon's 6 to 10 day update from the government did actually flip-flop on moisture. It went from below normal moisture for almost all areas of the Corn Belt now to normal to above normal precip. So that would be considered a bearish change. However, most private guys on this morning update, on their morning updates, are not making a similar change. They're still suggesting that yes, we do have a little bit of rain lined up here next day or so, but after this we will enter a period of dryness. So right now there is maybe a little dispute where the private guys are not confirming what the government made as far as a change yesterday afternoon. In terms of news flow today on the grains, things should be kind of quiet here in general. We've got NOPA coming out at 11 o'clock this morning, National Oilseed Producers Association. The trade's expecting May soybean crush at 149.67 million bushels. That actually would be 0.8% over last year. Now, one of Allendale's contention points here on the soybean issue is that USDA's old crop and new crop numbers or their demand estimates are probably a bit too high. And this report will probably confirm that viewpoint. In terms of how we're going to look here, keep in mind for these NOPA crush numbers. So for the month of May, the average guess suggests a 0.8% increase. In the 6 months before this, we were all running below last year levels. Now, why I make these points and really drive this home, in order to hit USDA's very aggressive old crop estimate as far as crush, we're going to have to run June, July, and August, the next 3 months out, at 5.1% over last year. And a few of these 3 months last year were records. So 6 months in a row of below last year pace for as far as soybean crush. We've got right now for May, people are saying a 0.8% increase, but to hit USDA, June through August has to run 5.1% higher than last year. So we are still keeping a little skeptical viewpoint as far as these numbers on domestic crush. As far as the crush margin, well, in April it was 65 cents, so it's moderately okay. In terms of May, it was fantastic, a very strong crush margin, averaging $1.09 per bushel crushed. And keep in mind, we had the peak in crush margins on May 26th. That was a full almost $1.63, which was huge. However, we're now down to 85 cents already. So this May crush should be fantastic and probably one of the best we're going to see if we kind of match up with margin rates. But next few months, we're back down now in this case to 85 cents, which is still a good crush margin, but maybe not enough for us to run 5.1% higher for the rest of the year. So a lot of questions about that. Now, as far as Thursday morning, we have a very important update from NOAA, the government's weather agency. Let's see their estimates as far as July weather. Let's also see the July, August, September weather, and all the long-term updates out past that point. Keep in mind, this NOAA update in 2012 was the start of that big rally we had as far as a drought rally. We'll see if this changes at all. Over on the cattle side, we expect some mixed trade here today. Good rebound in terms of futures yesterday. We had some light Colorado cash trade at 124. Of course, that's $4 lower than last week's action. A lot of people would suggest that's going to be a bearish issue. Keep in mind, though, this market's already been trying to price in a $10 drop in prices between last week and the end of this month. So a $4 drop this week certainly is very valid issue. As far as hogs, after yesterday's very strong trade, we expect maybe a slightly higher trade to start off this morning. Keep in mind yesterday's big rally was based on this quote-unquote weather fear and corn price rally fear. We already are seeing some weights decline, which is certainly a valid bullish point. However, it's not enough to be dramatic enough to suggest we need a massive change it on futures. One thing which this corn price change could impact is the June 24th hogs and pigs report. We'll have more discussion about that here in the coming days. So action as far as today should be some moderately light volume, slightly higher prices. We expect both mixed trade here today. It's both higher and lower as far as livestock, like I said, maybe mixed on cattle, a little higher on hog. If you have any questions about these markets here in general, how to market, how to trade in this environment, give Allendale a call here, 1-800-262-7538.